Today, ladies and gentlemen, oh my goodness, I've been away for a little while. The news is unreal. The accounts are pushing up to that $114,904 mark between the two trading platforms. And on top of that, we're going to break down some of the Fed news going on because, my goodness, we don't know if the markets are coming or going. So let's jump right into this. Welcome back, my passive income investors alike. I know I've been neglecting you the last couple of weeks, but I promise you once October comes, I will have plenty of time to start hammering down some real bloody news and information for you guys, because recently I was at that golf course, a video that I'm posting just before this one. You can absolutely check out if you want to see some of the jobs that I do. And don't worry, tomorrow I'm going to get some really awesome footage because I'll be back at the Royal Bank. But more importantly, we're going to break down the entire six-figure dividend portfolio. What's up, what's down, what's going all around. But I want to start with this. Powell says the rate cut is an insurance against ongoing risks. This is some very important stuff. So I'm going to break this down. But first of all, let's take a quick listen and see what the heck's just going on here.
Colleagues at the Federal Reserve and I are dedicated to serving the American people. We do this by steadfastly pursuing the goals Congress has given us: maximum employment and stable prices. We are committed to making the best decisions we can based on facts and objective analysis. Today, we decided to lower interest rates. As I will explain shortly, we took this step to help keep the U.S. economy strong in the face of some notable developments and to provide insurance against ongoing risks. The U.S. economy has continued to perform well. We are into the 11th year of this economic expansion, and the baseline outlook remains favorable. The economy grew at a 2.5% pace in the first half of the year. Household spending, supported by a strong job market, rising incomes, and solid consumer confidence, has been the key driver of growth. In contrast, business investment and exports have weakened amid falling manufacturing output. The main reasons appear to be slower growth abroad and trade policy developments, two sources of uncertainty that we've been monitoring all year. Since the middle of last year, the global growth outlook has weakened, notably in Europe and China. Additionally, a number of geopolitical risks, including Brexit, remain unresolved. Trade policy tensions have waxed and waned, and elevated uncertainty is weighing on U.S. investment and exports. Our business contacts around the country have been telling us that uncertainty about trade policy has discouraged them from investing in their businesses. Business fixed investment posted a modest decline in the second quarter, and recent indicators point to continued softness. Even so, with household spending remaining on a solid footing and with supportive financial conditions, we expect the economy to continue to expand at a moderate rate.
Now, ladies and gentlemen, I know what you're thinking here. This is quite an interesting talk because we have global issues going on, global slowing down, yet here in the Western world, all of a sudden jobs are still good, incomes are going up, but how does any of this make sense? A lot of weird stuff's going on, and I think Jay Powell here is a little bit worried. And what I want to mean by worried is because when I stand up in front of, let me turn that down. When I stand up in front of really big audiences, I tend to get some nerve-wracked, but for a guy that's doing the job that he's doing, I can't get over how nervous he is. And you're probably thinking he seems pretty cool because he's reading the paper, but look at the vibration of this paper. He's literally leaning his hands up against the table to basically stop himself from shaking. And I want to know why this guy is so bloody nervous. And he's just doing a really good job at hiding it. I'm curious to what he's been facing, especially considering he didn't want to cut interest rates, and now they are. The interest rates are down, and gold I thought was going to be spiking, but at the same time, because the interest rates came down, gold kind of came down with it, especially in Canadian dollars, considering we were just pushing all-time highs. And USD's gold is, again, down, guys. It's just, there's something really odd going on here, considering oil prices have been kind of weirdly fluctuating, as we thought oil was going to come down because Trump doesn't really want to start a war with Saudi Arabia right now, because there's just some really high tensions going on between obviously some of the boats and the oil kind of things that are going on, because over there they want to push the oil price higher, but they don't want to do that here because they know that if we can just keep oil down, it does transport and everything else really, really good as well, which has been keeping the Canadian dollar pretty much at par. Yeah, not much going on here in Canada right now, guys, other than a crazy housing market, which I talked about briefly in my golf tournament video there, which you can check out, which I'll stop plugging here. But let's just go over the six-figure portfolio itself, guys. We're going to look between the two accounts. We're going to start, first of all, with the good old tax-free savings account, baby, because we're dripping right now $5,422, which is down slightly month over month, just because of the Canadian dollar has been, if we take a look at the last month for the Canadian dollar, guys, as this Canadian dollar pushes higher, because I was buying these stocks when they were lower. When the Canadian dollar goes up, because I'm getting a lot of US dollars, it pushes my overall dividend amount down in the full CAD amount, because down here we can see these are all the US holdings, which we're going to analyze in a second here and just touch base on the news. But first of all, so if we take a quick peek at the Northland Power here, guys, we can see I just got some shares paid out on this one, which are nice because we're getting a 5% yield even on it at the current price, right? The Canadian banks are coming back with a bloody vengeance, baby. Steve Eisman can suck it. He's taking a big pain today, and I'm not saying that he's wrong. I do not trust the Canadian economy, but for as long as there's this many bulls and this thing just keeps running, I'm going to hold on to it for a little longer and see if we can get back up closer to my price before I decide to start leveling off some shares. And I'm pretty much to that place with BNS, but I'm not doing it yet. But what I will do is leverage these down and hold some cash on the side until I find some other stocks that I decide to purchase. But right now, I'm just going to hold on to them because the banks seem to be getting a lot of attention right now, and they're coming back with quite a vengeance. And so long as we can just hold off until the next quarterly earnings, I should be okay, because if something goes wrong in the next quarterly earnings, I can leverage down before then. But right now we're just sitting watching this wonderful rally. And unfortunately, the worst news of my entire portfolio is MO right now. It's nice to see the entire portfolio up, but my biggest positions that I've been recently adding this year, like MO and Altria Group, Altria Group and British American Tobacco, keep thinking calling it MO is Altria Group. The reason we're getting so tagged here is such the negativity around Juul, but this company, man, is getting so priced. It is absolutely ridiculous. So what I might do is sell the banks to continue to buy shares in these companies with these crazy dividend yields, because honestly, this heat will blow over. And they're saying that the causing of all these issues with lungs, I've repeated this time and time again, have to do with the combination of illegal and legal products on the market. But it's crazy what a microscope this has on it. And even at the golf tournament I was doing there, guys, I couldn't believe how many people were using Juuls. Now, from my own personal experience, I never found vaping to be that uncomfortable compared to some of smoking tobacco. So I mean, on its own, I honestly, from my own personal experience, can say vaping can help people, but the way it's being used right now and the way it's got a microscope under it has really been tanking this into the ground, which probably is putting a little bit of edginess onto this merger that we're hoping we're going to see this year. It'd be nice if that merger happens this year, where MO gets basically merged with Philip Morris, a company that I don't own right now, but I would like to see that combination come together. Right now, my average buy price is around 48, which we'll check out in the other account as well. But let's just take a look at what's going on. Apple seems to be pushing back into all-time highs. It is holding up in that 2025 range, 2025, 2020 range, which is really, really nice. I'm sure this company's going to end higher into the end of the year just because of their streaming platform. They're pushing so goddamn hard. They're basically giving it to you for free with certain purchases of their products, obviously for the first year or whatever, just to get you suckered into them. Southern Company fucking pushing into all-time highs again, man. I look at this company time and time again. We got some share drip outs. This company's just been doing unbelievably well, and thank God, because it's these few positions are what are keeping the entire portfolio up. So let's head on over into basically the managed account, the most interesting account. We got some dividends paid out in here, probably from MO, because I think MO was paying out, which we can see we got some. Well, has MO paid out yet? I'm not sure. Either way, I got some dividends paid out, which is fairly nice overall. But MO is taking the biggest hit in here, down 20% even from where I was buying it. I think this is still on major discount territory, and adding anything here, sure, there could be more downside risk, but trust me, in 3 to 5 years at the most, when this thing turns back around, I could easily see it get back into that $50 range. BTI was my best purchase because this is the British American Tobacco, and it seems to be one of my few tobacco picks so far that's staying up. But I'm basically using it as a good leverage because that brings this down a little bit, and we can see some leveling out. J&J is pretty much at my buy price. Starbucks basically at my buy price, still down 6%. But honestly, unless it hits back into the low 80s, I don't see this, being another real purchase. I just want for long-term hold coffee to be part of my drug sector along with Johnson & Johnson. Anyone that's been buying Tesla on those dips, like I've been saying forever, you're killing it right now, guys. Anyone that bought those Tesla dips are freaking killing it. And either way, down 30% on this, guys. This is a company that I can see being worth thousands of dollars in the future here, and I want to pick up some more shares. So I have some money right now, but I'm just building up my tax accounts because I'm going to have to do some repairs on my car again. I got to get some winter tires because mine are kind of wore out. I'm just trying to save up some money and get some cash built up into the end of the year here to make sure I can mitigate this as comfortably as possible, because I'm going to have to leverage out of this and either put it in my RSP, spend it on a business, but I'm trying to find a way to hold as many of these companies in this account as possible without paying the least amount of tax as possible, which we are a little ways from. But there is a lot of bulls on this, and I think I might just take a few $100s and purchase another couple shares, at least try to anyways, because I want to get my share price up to 10. and I want to do that sooner rather than later because I still think we're in major discount territory here, but that's a little ways out. 3M has been doing fairly good overall. We're well up above my buy price, but because I think I was buying it when the Canadian dollar was down, we're just seeing a little bit loss on the conversion there. And obviously, if we take a look at the final account, like I said, you could always just buy index funds, guys. If I just bought index funds, I would be doing pretty well considering VFV has done nothing but go up this year. And I've got a little bit of cash sitting in here, but this is going to be some interesting stuff coming soon, guys. I just got to get through the next few days because tomorrow I'm performing for the Royal Bank again, and that's going to be about 7,000 or 8,000 people live. I'll try and get some footage like I did last time just to show you guys the scale of some of the jobs that I am involved with, which is really cool. Now, before finally jumping into the dividends here, let's just take a look at 3M in this account because I think we're actually up on 3M in this. Oh, no, we're actually down just a little bit, $2.52. But overall, the unrealized gain and loss is up on the actual dollar amount because we can see that I bought this at book cost of $6.64 and today it's sitting at $6.69. So we're up $5, but I think we're down on the U.S. conversion limit. So overall, this is one of the first purchases I made on your behalf because you guys voted for this, and it's still doing pretty well, which we're going to update on regularly. But in the meantime, let's take a quick peek at the good old Dividendianos here, because the dividends are the beaut, the gold, the dream of this entire portfolio. And we should see that Northland Power paid me an extra share, so we are getting, we should be getting a few more out of this. Still a really nice buy price overall. For those of you that are new to this channel and haven't really seen the dividends, I'm showing this to you to give you an understanding of how collecting dividends work and how the payout works, because come October, we're going to be getting some really healthy dividends coming in between the 4 accounts, because here we got 403 and 192 that are getting reinvested, 192 US, which is about 220 Canadian, 230 Canadian getting reinvested, and then 403 Canadian getting reinvested in the basic account here, probably coming from obviously October. We have 3 Canadian companies paying out in shares, which is really, really nice because that'll help me basically if they buy them on a discount, I'll be able to sell them if they keep rallying, which is what I'm looking forward to. But mind you, even when I sell off my small percentage in these positions, I'm only selling off a few $1,000 a pop, because you can see I have about 16,000 in CM and about 12,000 in Bank of Nova Scotia. And what I decided to do with this money will be debatable, but I'm only selling off about 4,000 in CM and maybe about 1,000 or 2 in BNS, or I might not even touch my BNS shares right now. I'm debating on exactly what I'm doing here, but I keep kind of flip-flopping on this every week for you guys. I'm sorry about that, but I really needed time to sit down and analyze this. So this is the one account which is paying out really nice, basically tax-free dividends. And then in my managed account, October's paying me out another $115 in Canadian dollars, so that's bringing us well up into the $500-600 range, which is absolutely muy bien, because I'm going to try and start leveling these out with some more monthly pairs. I'm thinking about purchasing a couple REITs, maybe a really small percentage of those high-yielding REITs like TNT that pay out 8-9%, and then maybe some RioCam. But just because I'm having such a hard time with Canadian real estate here, it's a hard debate, which I'm not going to get into today because I talk about it a lot, but if I can't afford real estate, I would still like exposure to it, especially if it can pay me monthly. And I'd rather own it through a REIT than personally leveraging myself to the nines to try and get a $500,000 property with one tenant. Whereas when I could own a piece of $1 billion real estate company that'll pay me monthly reliably, even in bad times, as they've survived the '08 crash and everything else in between. And here we actually have some more payouts coming in for October, guys, not being reinvested because it's not enough to purchase shares back, but at the same time, we're still getting $17 in dividends from the wonderful VFV here, leading me into my final closing statement for you guys. I really hope you enjoyed this video, and I'm terribly sorry for the lack of content. I am trying to keep up, so slap a like if you do enjoy me updating you on my 6-figure dividend stock portfolio. There's so much news going on right now that is making it extremely confusing overall to try and understand what is going on in the markets. If we take a look, maybe we'll scoot on over to StockTwits here real quick, which, by the way, I will be heading over to Stocktoberfest in San Diego next week, along with my big show at the Markham Theater. And it's nice that these guys are flying me all the way up to San Diego, and I'm going to get you guys the live stream link, baby, in soon time here. Don't worry, I'm going to try and do what I can to get you guys some content, because, I mean, StockTwits has been one of my trolling forums for years and years and years now, and I absolutely love this thing, so I'm so glad I get to meet the people that run this. But scrolling through just to see what's going on with the overall markets, guys, everything kind of came back over the last few days. We saw a lot of red in the beginning, and then I don't know what news brought it up. Maybe it was just the fact that they're cutting interest rates. I'm not quite sure, to be honest. But at the same time, just scrolling through the overall outlook of what's going on with my watch list here, we can can see the stocks that I love that I sold, like STZ is up a little bit from my sell price still. I sold it right around 201, 202. I just didn't like the fact they sold fired Bruce Linton, Canopy Growth Corp, old CEO, which I'm trying to figure out what company he's trying to get exposure to, because Canopy's up quite a little bit from the dip that it had. So anyone buying those dips, congrats to you guys, because my goodness, it hit the low 30s and now we're getting back into the higher 30s. But more importantly, I just want to see what Netflix and Bitcoin are doing, because Netflix is going to be taking some big hits. I think the days of Netflix being the #1 streaming service is slowly coming to an end. And I think from here, we're going to start feeling extreme pain as Disney and Apple start taking over. Facebook, not much going on with the Facebook. Google's actually been pushing a little bit higher. But like I said, I just want to see what Bitcoin's doing, because you think in all this volatility, Bitcoin would be going higher, but it's kind of holding flat right now, which I imagine is putting a little bit of people on edge. If we scroll through here, is there anything interesting going on? What is this? You can call this an alt season. That's funny. I always like looking at the memes. What's this one? As mentioned above, the state of Florida doesn't have a death tax, but qualified Florida states are still responsible for federal estate. I don't know what this relation to Bitcoin would be, but oh, here's a fun one. Max Power, he's the man. Are you going to be bored when Bitcoin is at 500,000 waiting to go to 510K? I honestly don't see that happening, bud. A lot of people here are still way over exuberant about this. But remember, guys, somebody has to basically be willing to pay 500,000 for Bitcoin. That's how the markets work, my friend. And one day people are going to stop being willing to pay 10 grand for Bitcoin. I mean, it's just factual knowledge. Things can go up over time, but heck, they can only go up so much, and someone can only be willing to pay so much, and I ain't going to be the fool that overpays too much for shit. But anyways, I hope you guys enjoyed this. This is a quick brief through. There's a lot of interesting videos too on GameStop. I'm not going to get into that today, but there was a guy that was part of the big short that was buying GameStop at a loss, and then somehow manipulated the stock price slightly and sold out recently, which I thought was really interesting, but that's a whole nother news for another day. Anyways, I hope you guys enjoyed this video. Stay cool, stay awesome. I look forward to chatting to you real soon.